Hello everyone, welcome to the Ichimoku daily analysis for the US dollar index for Tuesday, March the 22nd, 2011. Well, the market continues in the trend to the downside with a series of candles making lower highs and lower lows in the first time frame, and that's on a bar-to-bar basis. And if we also look at the peaks and troughs, we have a downtrend in the second time frame based on peaks and troughs. Here we can see a peak, a trough, a lower peak, and a lower trough as we took out that area, another lower trough, a lower peak, and another lower trough as we took out that previous trough around 76.30. And the market's been trending down fairly solid initially, but now an interesting thing is happening here as the market's continued on its way to the downside. We can see that the size of the bodies of the candles has started to decrease, and that quite often can be a warning sign that there may be a change of trend. What you like to see as a trend develops to the downside is the bodies to be red for a start, and the size of those bodies to become larger. And that's what actually happened on these 2 days of trading, 3 and 4 days ago. And the downtrend was looking fairly healthy, but then yesterday's trading we had a spinning top type candle, and now we have almost a doji type candle with a larger shadow on the bottom and only a very small red body. So that tells us that the amount of progress that the bears are making is becoming smaller and smaller each day as the market's trading down to these levels. Now we have very solid support down around 75, and that was a very strong area. So obviously that region of support is exerting its influence, and we could see the loss of commitment from the bears as evidenced by the shadow on the bottom, and the buyers came back in to close the market in control for the trading day. So significantly there could be a change of trend to the upside. Now this is a potential bullish harami pattern, and we do need to watch the high of this current candle for a potential higher high and a higher low, and a potential retracement back up to these levels where the Tenkan is trading at up around 76.31.5. Certainly 76.60 is a decent area of resistance for this market, and then up to the Kijun Sen around 77. Now the market is bearish in overall big picture terms because we're trading down below the cloud, but we are trading a long way below the cloud. So we could see the market snap back like a rubber band, and it does look a little bit overextended. Trading a long way below the Kijun Sen and Tenkan Sen as well, and by trading below the Kijun Sen, it tells us that in the medium term time frame the market is negative, it's bearish, and in the fast term time frame the market is bearish. So all bearish indications from the Ichimoku charts. So certainly combined with the short-term dynamics, this market is set up for a change of trend to the upside. So do be on the lookout for a potential higher high and a higher low.